Hey guys, it's been some time I posted on here on YouTube as I've been preparing for my very powerful bootcamp coming up on the 25th to the 27th of November. That bootcamp is going to be extremely powerful. I have had so many research and so many years of knowledge being put into a very beautiful 3-day bootcamp that is going to be holding on Zoom. Okay, so if you want to join this boot camp, you want to be part of so many things that I'm going to be teaching, because I'm going to be teaching so many things that are going to cut through technical analysis, psychological analysis, risk management, trade management, every single aspect I'm going to be teaching. If you want to learn and if you want to join, link is in the description below for you to join and be a part of this webinar that is going to host on Zoom. Okay, it's going to be extremely powerful, and every single person is going to have their trading turned around. There are so many things, that I'm going to be exposing in regards to even how to pass your prop firm excellently well. Okay, so but beyond this, right, what are we going to be doing today? Today we are going to be exposing a lot when it comes to our price action trading analysis. Obviously, there are so many things that are going to be kept secret for our students and kept secret for those that will attend the bootcamp. Okay, but I'm going to do very well to expose a lot to the free community so that you all can be able to learn and you all can be able to understand how we trade the Forex market. Okay, so what do we do before we get here? This is the daily time frame, right? We always start from the monthly time frame. If you have been following my teaching, you are familiar with this, that we start from the monthly time frame. So we take all of the drawings out. We take all of the drawings out and we start from the monthly time frame. Okay, and what is the first thing we do, right? The first thing we do is to read the projection of the market that sent us here. What brought us to this particular point? How did we get here? Okay, it's important to note, right, that by the time we zoom out and make the chart really tiny, we can see that what market has been falling since 1975. That's when price has started making all of these bearish movements. So this means that what market has been bearish since 1975. You can see that what the trend is downwards. Okay, when we look at it from a yearly perspective, the trend is very, bearish. So one thing is certain, right? GBP JPY, long before we were born, has been bearish. Okay, so there's a high probability that even long after we are gone, GBP JPY is still going to be bearish in its entirety. Okay, but now we are now going to zoom in and let's just read this particular more recent information. When I say more recent, here we are starting from 1990, right? So all of this is push. This is the first wave of exhaustion. Okay, let's redo that again. All of this is push. This is the first wave of exhaustion, but this couldn't send prices to create, a very bearish push. So what did prices do? It went for another wave of exhaustion, and this was able to send prices for a very bearish push. After this, what the prices do? Went for the first wave of exhaustion. It wasn't able to send prices down for a very bearish push. Then what the prices do? It went for a second wave of exhaustion, and sometime very, very soon, we are going to see markets crash to the downside. Okay, because something about the market, right, is that it repeats itself. That's how the market works. It repeats itself. That's why we are able to be price action traders by what? By using the historical data to predict the future movement of prices. Why? Because the market repeats itself. If it doesn't repeat itself, then there's no point of trading technical analysis. It means that you are just gambling. But because it repeats itself, we know that what the same thing is going to happen. Just like it happened in the past, prices came the first time for an exhaustion. It couldn't create that very bearish movement. Then it came the second time. It's the same thing happened here. It came for the exhaustion here. It couldn't create that very bearish movement. Then it came the second time. And we know that, well, sometime in the future, right, it will hit a ceiling and it will crash down. However, as far as now is concerned, price is still trending upwards. It's still making these bullish movements, which are retracements, okay? Because we know that in its entirety, right, price is bearish. So all of these bullish movements are still retracements that have not hit a ceiling yet. It's going to hit a ceiling, and when it hits the ceiling, it will crash down, but it hasn't hit the ceiling yet, okay? And we are going to talk about, how, or when we are going to know that it has hit the ceiling, okay? But beyond that, let's just go ahead and read the structures, okay? Starting from here, right, we saw, okay, let's take it properly again. Starting from here, we saw price made push, we saw price come for the first wave of exhaustion. Continued again, push, exhaustion. All of these are bullish structures that are taking prices for the retracement. Price continued again, push, exhaustion, push, exhaustion, and right now prices seems to be making another wave of push. Yes, we've not had a monthly close yet, so this candlestick has not closed yet. So, but either all right, price is making clear bullish structures to the top side. So what are we going to do? We are going to identify the last higher low point of prices, okay, and we are going to identify the last higher low point of prices. As far as now is concerned, because we've not had a monthly close yet, we are still going to pick this level here as the last higher low point of prices. As soon as we have a monthly close, then we are now going to pick this level as the last higher low point of price. But because we've not had a monthly close yet, you don't know, price could decide to close very bearish to end the month. But either or, this level still remains what? The last higher low point of prices. Because what? Because the prices at this point has not closed yet. Okay, so now what are we going to do? We are now going to take this high right here. Okay, and what are we now going to do? We are now going to take this window here as our range of focus. So what are we going to do? We are going to tag these levels. Okay, so here we'll tag this level as the monthly support. Then we'll tag the level at the top as the monthly resistance point. Monthly resistance point. Okay, and what are we now going to do? We are now going to take this window right here as our range of focus. Okay, so on the monthly time frame, what are the things we do on the monthly time frame? The first thing we did was what? If you all remember, we identified that okay, price at this point. Now what is the next thing? Next thing, we read the entire structures from 1975 and we discovered that price is entirely bearish. Okay, however, price is currently making a retracement. It has not hit the ceiling yet. That will send it down for the bearish, continuing of the bearish movement. Has not hit the ceiling yet. So price is still making bullish retracement movement here. So this retracement movement, what did we now do? We took the last higher low of this retracement movement. We took the current high of this retracement movement, and we took this window as our range of focus. Understanding fully well that what within this range of focus, right? We are bullish within this range of focus because what? If we are selling it, we mean that we are selling a retracement, and if we are buying, it means we are buying in the current direction of trend. Why? Because what prices is still making, the structures that brought prices to this point are still clear structures of higher highs and higher lows. We can see all of these structures here are clear structures of higher highs and higher lows. Those are the structures that are currently sending prices for a retracement. All these bullish structures, higher highs and higher lows. So any sell might just be a retracement, any buy might be in direction of trend until it hits a ceiling and breaks and sells. But that ceiling, it has not hit yet. Okay, we have our parameters and we have our secrets to allow us to know when prices is going to hit a ceiling to start selling. That secret I'm going to let out during the bootcamp. Okay, so now we'll take this to the weekly time frame because obviously we run a top-down analysis, right? So we started from the monthly time frame, which allows us to see the big picture of prices, and right now we're taking it to the weekly time frame. So within this window, what is going on within this window, right? From here, we saw prices make push, we saw price come for an exhaustion, all of this push, all of this exhaustion, all of this push to this monthly resistance. We saw a break of structure here. The last higher low got taken off, or you can call it a change of character. The last higher low got taken off where prices sold for a retracement. Okay, then when prices sold for this retracement, it ended right here, then had some weak rejection right here. But either all right, all of the retracement structures got broken after prices took this last lower high off. All of the retracement structures got broken. I'm going to expand this on the daily time frame and show you all. But either all right, all of the retracement structures got broken. So here, prices came for what is known as a discount before takeoff. Okay, we have this analysis that allows us to know that after a break of structure, right? Like in this case, after a break of structure, prices comes for a discount to grab more bulls before taking off. Okay, it usually comes for a discount to like the 61.8 or sometimes it could stretch to as much as the 78.6 level. Price could come there before takeoff to the entire top. So that is what happened right here. Okay, but every single thing that happened right here, let's go to the daily time frame where we can expand every single thing and just go ahead and read it together. Remember that these two levels have been tagged. The top level here is tagged as the monthly resistance point. We can bring the tag a bit closer. And the bottom level here is tagged as the monthly support level. And this is where we are currently dealing with, right? Trying to look for a new trade entry opportunity for all of us, right? So from here, what are we seeing? From here, we saw price made push. We saw exhaustion, push, exhaustion, all clear bullish structures, increasing structures. increasing structures, which means they have the same fractals. Okay, I'm also going to be teaching fractals and structure circles during our bootcamp, so everyone can be able to learn what is structures, everyone can be able to learn what is fractals, right? So all of this price made a push here. Okay, so when price made the push here, this level right here is what is the last higher low point of prices. This is the last higher low point of prices. Then what the prices do from here, after it hits this monthly resistance, prices broke and sold for a retracement. All these sales are retracements because within this zone, right, we said it was bullish structure that brought us here. This means that what any sell is a retracement. So all these sales were only bought retracements, just like we saw on the weekly time frame also. So all of these retracement structures, right, we can see all these retracement structures, they got broken here. Okay, where did they get broken? At what? At the last lower high point right here. Someone might ask that, why didn't we say this is a lower high? It is not a lower high because it does not have a lower low. Lower highs are only confirmed by the presence of a lower low. So this is the last lower high where prices took the structure of, allowing us to know that direction of trend, we are coming to as much as this level. However, we are knowledgeable enough to know, right, that after a break of structure, what do you expect? You expect a discount before takeoff, which is what prices came to do. After it broke the structure, prices came for that discount. We are going to bring out the Fibonacci and see where prices came to do the discount. If we bring the Fibonacci from here to here, we'll see that what prices came and rejected the 78.6 level. So the discount was at the 78.6 level. So let's go ahead and target the discount at what? At 78.6. 78.6 potential reversal area. Okay, so this is the discount level here where prices came to from. So from this discount level, what the prices do, it came to grab more bulls. Then from here we can see prices shooting up and it's almost at take profit level. So what is our job? Our job is to see how we can tap into some money to ride to this take profit level. Okay, so again, what happened with prices, right? All of this, like we said, a push. This is an exhaustion, this is a push, this is a break of structure, discount at 78.6. So price is just moving in wave patterns to take profit. That's what price is just doing, moving in wave patterns up to take profit. So my job is to read these wave patterns and see how I can tap into an opportunity for myself. Okay, so what are the wave patterns? From here, push, exhaustion, push, exhaustion. So here we can make money on the buy, make money on the sell, buy, sell, make money on the buy, you know, continue by what? Making money on the sell, making money on the buy, making money on the sell, buy, sell. You can see our price is moving on higher highs and higher lows because that's what compounds a bullish structure, higher highs and higher lows, and that's how price is moving. Okay, make money on the higher high, make money on the higher low, make money on the higher high, make money on the higher low, and this is how we're going to keep moving till take profits. Okay, so how do we get our entry, okay, to make money for the new week, right? Which is how we've been doing. You know, like I said, most of these things I'm going to expose it in the bootcamp. The bootcamp is going to be very, very powerful. And the bootcamp, as we can see, is just $50, okay? Because I tried to make it affordable for everybody. So everybody can be able to come, you know, we're going to access it. And I'm going to give you a lifetime access to all of the recordings in this bootcamp. It's going to go from, you know, price action, explaining every single detail of price action, to explaining, you know, multi-time frame analysis, top-down analysis, how to ride a trend, add-ons on trades, you know, identifying your trading edge, how to journal properly, customizing a trading plan, every single thing on psychology. You know, I'll be giving you all our psychology Bible. I'll be giving you all our account growth sheets. I'll be giving you all so much that is going to allow you to turn around your trading completely in its entirety. So this bootcamp is going to be powerful, and I want to make it the most important bootcamp in the industry. Okay. Going back to our trading, right? We said that what all of these bullish moves are money making moves. We make money on the buy, we make money on the sell. You know, these are price moves in waves. So all of these are money making moves, you know, that we are going to use to make money for ourselves. So what are we now going to do? Just like we did on the monthly time frame, right? We identify the last higher low. This is the last higher low point. Then we'll now identify the current most significant high. Yes, there's an high above, but this high that price is currently rejecting now is still the most significant high, because there's a reason why price is rejecting at that level, right? So we are now going to tag these levels. Okay, this is the daily time frame. We'll tag this level as here. We'll tag it as daily resistance point, because we can see some reactions there. Here we can tag it as daily support point. And what are we now going to do? We are now going to take this window here as our range of focus. Okay, so we'll take that range of focus to the 4 hours time frame. Okay, so within this 4 hours time frame, we can say that what, okay, instead of reading these structures on the 4 hour time frame, which we can, but we can decide that, okay, let's take it to the 1 hour time frame so that we can expand this window. This window now is our range of focus. We want to be able to expand this window, and what, by the time we expand this window, let's see our new trade entry opportunity, right? So now this is the current window that we are dealing with. So now let's categorize prices into its respective structure circles, right? So from here we saw price made push, exhaustion, here push, exhaustion. Okay, then prices ended that particular structure right here. Okay, this is where price ended that structure, because after this price a smaller structure circle, okay, by making here push, exhaustion, push. Okay, let's continue that. Push, exhaustion, push, exhaustion, made bigger structure right here, push, exhaustion, push, exhaustion. Okay, this now ended that particular wave of structure again. Okay, then within here price now started a new structure. So all these small structures, I usually just put them as one. I don't like to read small structures. I'll just take this last higher low and this high, and I'll just read all of these small structures as one structure. Okay, so what do I mean here? I'm going to tag this level now as 1 hour resistance point. So I'll put CSC here. CSC means is the current structure circle, which means I have no business below. Here I'm going to tag it as support, and I'll put CSC. Also, CSC means is the current structure circle, which means I have no business below, which means for this new week, my money making window is here. So what am I going to do? I'll take this low, I'll take this high. And how can I make my money? I'll just bring the Fibonacci. I have skilled ways in which I use my Fibonacci, in which I'm going to expose in the bootcamp also. So I'll bring my Fibonacci from the low to the high. We can see that price has rejected 61.8, which means that what? Which means that there's a high probability that the retracement has ended. Retracements end between 61 to 78.6. Anywhere within this window can reject a retracement, but either or, right? I'm going to tag this level right here as a potential retracement level. This is the 61.8 potential. Okay, no, let's take this. Yes, this is the 61.8 potential reversal area. And I'm also going to tag this level below the 78.6 also as a 78.6 potential reversal area. So what am I going to do, right? Now that I've tagged them, I can take the fib off. And what am I going to do? At 61.8, I could decide to place in my entry, and put my stop loss below the 61.8. Okay, just a moment. I'll make that better. Just a moment. I could decide to trade at 61.8, then hide my stop loss below this last higher low here. I can just put it a little bit below this last higher low, which is also below 78.6, because like we said, price could come to 78.6 and I can buy it to the top. Okay, this will give me like 1:2.5 risk to reward, right? Very beautiful risk to reward. If I put $10,000 on this trade, I will go to put $25,000 on this very beautiful trade. I could also decide to wait and see if price will stretch to the most premium level here, which is 78.6, which means I might decide to just stretch my stop loss a little bit just to make sure that, okay, there's enough breeze, and maybe just get like 1 to 5 risk to reward. 1 to 5 is beautiful. If I put $10,000 on this trade, I'll be going with $50,000, and this is how we are able to trade, and this is how we are able to make money. Why? By just what? Identifying levels. We've identified potential. We've identified our current structure circle. This top, this bottom is our current structure circle, and we know that what? All of these cells are only but retracements, and we know that these retracements will either end at 61.8 or end at 78.6. So I know that either of these two levels are our buy levels. So here I could decide that what, at 61.8, we can see price has already rejected at 61.8, but there's a high probability that for it to still come back, right? We could decide at 61.8, let's just buy at 61.8. Let's not wait and see price will get to 61.8. Let's not stress ourselves. Okay. And what are we going to do? We'll make 1 to 2.4 risk to reward. Oh, we could decide that what? Okay, let's see. Price might decide to want to come to 78.6. And at 78.6, we can put our stop loss still below right here and buy to the top. And maybe we can be able to make as much as 1 to 4 or 1 to 5, at max 1 to 5 risk to reward on this particular trade. So these are we are able to make money, okay? Just identifying these levels, identifying our current structure cycle, identifying our PRA, and before you know, we're striking and we make a very beautiful amount of money, okay? If you guys check all around YouTube, it's very difficult to see someone that trades this way because we trade from the highest level of expertise. We're talking 8 years of studying and mastering the Forex market. And that is what I'm going to be teaching you all during the boot camp. It's going to be 3 days of just pure knowledge. And like I said, you all are going to have lifetime access to all of the recordings in this boot camp. So link is in the description below for you all to join the boot camp. And I'll be seeing you all on the 25th of November. Everyone have a nice, studying of the teaching.